Today, we're tackling a question that's starting to pop up more and more in real estate, and that is, what will tariffs mean for the Dallas housing prices over the next year? If you've seen the headlines recently, you know the federal government is looking to impose new tariffs on foreign-made goods. And so we're going to break down exactly what that could mean for the Dallas real estate market. So whether you're a buyer, a seller, or an investor, we are not here to comment on the pros and the cons of this foreign policy. We are simply wanting to keep you informed on how this will affect real estate, especially in the Dallas market. So let's get into it.
Quickly, let's talk about what tariffs are and how they affect real estate. A tariff is basically a tax on imported goods. When those goods become more expensive to bring into the country, the companies that rely on them, like home builders, usually pass those added costs on to consumers. And in real estate, those consumers are all of us, whether you're a buyer, a renter, and even sellers indirectly. Most of us don't buy steel or lumber directly, but if those materials are used to build homes and the cost of building homes goes up, then prices for both new construction and existing homes will rise.
That's absolutely correct. So let's bring this home to Dallas. Builders in North Texas are already stretched super thin. We are seeing continued population growth, limited inventory, and rising interest rates. If tariffs are thrown into the mix, especially on things like lumber and steel, you're adding even more cost to the production of these homes. Think about framing, roofing, siding, appliances, even HVAC systems. Many of those components involve materials or parts made overseas. If the cost of those materials goes up, it raises the bottom line for builders. And then guess who ends up footing that bill? Exactly. Inflation is always passed on to the consumer, or in this case, the buyers and the renters.
Since real estate reacts more slowly than the stock market to shifting trends, you may not notice these changes right away. But in some cases, builders in Dallas are starting to issue price adjustments or surcharges for materials. And that will also make its way into the resale market. The reason this happens is simple. When new builds get more expensive, buyers turn to existing homes as a more affordable alternative. That increase in demand puts upward pressure on prices. So even if you're not in the market for a brand new home, you will still feel the impact on tariffs on home prices.
So what does this mean for housing prices over the next 12 months in Dallas? So here's our take. Unless something major changes in government policy or the global supply chain, we expect home prices to continue climbing, not necessarily because demand is out of control, but because supply is going to be increasingly expensive to produce. So even if interest rates stay relatively flat, the cost of construction materials could keep home prices from dropping the way that most people hope that they will. Especially in Dallas, where we expect demand to continue outpacing supply, home prices will continue to rise.
And Elias, that's a really important point. We still have a lot of people right now waiting for prices to drop before buying. Some of you have realized that it probably won't happen. So you've jumped back into the market, but others still want to wait for that so-called bubble to pop. But the truth is, tariffs are just one of the reasons that prices might stay high or even increase. Remember, Dallas dwellers, Dallas is still one of the fastest growing metroplexes in the country. So when you combine strong population growth, limited inventory, builders facing higher costs, and interest rates still floating around 6 to 7%, you've got a recipe for slightly rising prices, not falling ones.
Absolutely right. So now let's get a little bit more specific. What kind of homes are most affected by tariffs? Well, first and foremost, the obvious is new construction, which we've already covered. And we also have talked about this and how it trickles down to existing homes. But there's one group that gets hit the hardest and maybe unexpectedly: first-time home buyers. When those new homes become unaffordable, first-timers shift their focus to older homes. But with more people competing for those properties, prices go up there as well. It's just the unfortunate truth that as houses get more expensive, the ones who feel it the most are the people trying to get into their very first home. So if you own your home, you get to ride the wave of home appreciation and at least benefit from inflation. But that's not true if you are renting.
So what can buyers do to protect themselves? First off, if you're thinking about buying this year and you're financially ready, don't wait around hoping for a market crash. The best time to buy a home was yesterday, and that will always be the case. It may feel expensive right now, but no one regretted buying a home 10 years down the road. Second, be open to homes that might need a little bit of work. Renovation costs are definitely rising too, but you still get better deals buying older homes that need cosmetic upgrades. Newly renovated homes and new builds are going to cost a premium.
And for sellers, this may feel like a bad time to sell, as you won't automatically get multiple offers on any home you throw on the market. But it isn't as bad as you think. You see, for many Dallas Metroplex homes, The equity you build during the years of highest inflation haven't magically vanished. Especially if you've owned your home for more than 5 years, there's a great deal of equity you can cash out on. But just remember, if you're selling and then buying again, you're still stepping into the same market, so make sure you plan accordingly.
Now let's talk about investors, because we know a lot of you watching are keeping an eye on investment opportunities in DFW. As usual, we are bullish on the Dallas market. This might sound counterintuitive, but tariffs could actually make Dallas an even stronger play for buy and hold investors. Why? Because if construction slows down due to rising costs, rental demand goes up. Fewer new homes being built means less supply with equal or more demand. Pair that with continued population growth, and you could see strong rental income and appreciation potential in the next 12 to 24 months.
Okay, so to sum it up, here's what we think will happen over the next year if tariffs continue to impact building materials. New construction prices will rise. Resale prices will likely increase slightly or at least stay stable, and inventory will stay tight. Buyers may get priced out of certain markets. Investors may see an opportunity for increased rental income, and a housing crash in Dallas probably will not happen.
If you are looking for help navigating this market, we would love to be your guides. Whether you're buying your first home, investing in a rental property, or even thinking about selling, Goal Line Real Estate is here to walk you through it. Don't forget to subscribe to stay updated on what's happening in the Dallas real estate market. Thanks for watching, and we will see you the next time.